Today is Friday, July 1st, end of the first half of the year, start of the second. Let's see if we can do a little better. Let's get started. Please pause your viewers, read this. It's important to you, it's important to us. If you agree, go ahead and hit the play button. The market model via our cumulative tick indicators is still showing pretty bearish. We did have a little bit of a recovery. As you can see, we had the continuation across the open, which is something we always look for. We did get this reversal that happened, probably about 10:30 or so, and then proceeded into about 1300 Eastern Time. What this effectively means is that we're off the lows, that there was some buying, and you can see that up here in the filtered cumulative tick where the institutions or the sweep orders did start pushing up, but then we failed. And basically there's really no pressure here into the end of the quarter, and as a result we didn't really advance like we like to. Overall, our primary longer term trend remains down. Our suggestion is don't fight this. We can certainly rally within this, but we've got many days before we can plow through this. The index condition, we're seeing net negative gamma being added to the complex. It's a continual theme. I know those of you who listen to this every day, it's the same thing over and over. The big deal is that a well-hedged market to the downside doesn't crash. It can certainly go down, but it's not going to crash. And that's because as people add puts and as we go down, they monetize those puts, and that monetization is what causes the reflexivity to keep the descent fairly controlled. Now, I know everyone will say, well, wait, we're down 20%. Yes, but it wasn't 20% in one day, and the reason for that is this well-hedged nature that we're seeing here. So the SPX, seeing that, we didn't see anything really in the SPY that was remarkable one way or the other. The Qs have reversed. Yesterday we were showing actually some anticipation of positive advancement, but now we're seeing protection go back in, and we're seeing some calls get monetized out, short-term calls that is. IWM, same thing that we've always been seeing. No demand on the call side. On the short-term gamma negative side, we're still seeing things being added in. Volatility, a little bit of an improvement, but it's a mixed picture. We're seeing over here on the left-hand side some puts going in, people wanting to take advantage of any potential drop in volatility, and so we're seeing that, but we're also seeing some upside go in. This is gamma, so shorter term, not necessarily longer term, so I want to pay attention to that. Over here on the expiry for today, the dot indicates what the VIX was at the close yesterday. You can see we're right in this transition area. We've got this big dominant level here of calls at 30. We've got another big dominant set of puts here at 28. So kind of right in the range. Anybody who tracks this stuff will understand that VIX probably does not follow a traditional gamma model. But again, answering some of the questions, we do like to visualize this in context of our other tools just so that we can have a comparative analysis. But just remember, VIX is tied to many other things. It is not a straight gamma model. Finally, down here looking at the history, you can see that we've actually been walking up in volatility, and we're now sitting kind of right at a balance point. So it's going to be interesting to see how this plays out over the next week. Near-term expiries, these are all coming off today. So these are 0 DTEs. The SPX is cash settled. The SPY, Qs, and IWM are equity settled. So there may be some push to actually see these get monetized today, especially into the longer weekend that's coming up. We have a large negative expiry that's occurring here when we see that. And as price walks on down, the moneyness here changes. And there could be an acceptance to go ahead and cash those in, unless they want to be holding short equity here. The implications are that when we do advance down, we get that reversal, and then that reversal up is due to the reflexivity of the dealers having to buy as we close those puts. So the real key thing here, you can see a very big dominant level here at 280 in the Qs, and we're just below that. Any walk down in this, especially down below this, I think it's like a 278 or 277.5 level, would be a major shift in moneyness, and we would be looking for that kind of reversal there. So the if then here is that if we do drop below some of these key levels, pay specific attention to that monetization component. Same thing exists here at the what is this, I don't know, 68 or so. Yeah, 168, you can see it right there. So we're sitting right here. If we drop below 168 in IWM, we could also see that same thing. So just pay attention to all that. Index option OI change, not necessarily predictive, but it's something that we find interesting and useful to track. Still seeing a dominance for the SPX on the put side, and you can see the magnitudes and how the distribution for the upcoming expiries are. Not as bullish compared to the bearish here, so I want to just note that. And then over here on the SPY, actually seeing reversal of this. We're seeing more bullishness than we are in the bearishness side, so that's kind of interesting. Want to pay attention to that. Short-term plays on the SPY could be up. That could counteract some of the negativity that we're seeing on the SPX. The Qs, kind of that same story. We're seeing some bullishness develop here, almost no bearishness over here. So that's a very interesting tell. And then IWM, we're actually seeing some bullishness develop here. Again, OI change by itself is not predictive. OI change in context of duration to DTE is related directly to delta and gamma analysis. So I want everyone to pay attention to this, because the shorter the expiries, the greater the impact on gamma and the greater the impact on those levels. So we want to pay attention to that. The SPX structure into today, it's fairly mixed. We thought we had a stabilization yesterday. You can see across the board, up one day, down one day, and anytime you see a one-day thing, it means the previous day was the other direction. In general, we're kind of right in this zone. This is a no pressure zone. We're at the lower range of this. We did clear out the JPM trades that were there yesterday, so that does free up a little bit in terms of delta and gammas. But the key takeaway for everyone here, at least for now, is that the structure is still stabilizing. We're back and forth, kind of in this driftless area. I know everyone would say, well, wait a second, that's a pretty large move. In reality, it's not. The markets are pricing in a much larger open, high, low, close expected move than what we're seeing day over day. So actually volatility is quite dampened relative to what's being priced in on the at the money spreads for the SPX. The 0 DTE, I think the key takeaways here is that it is a fairly significant level for the expiry today. We want to pay attention to that. Net negative gamma, as you can see, a lot of red down here, very little green up here. The yellow is where we are. You can see above 3850, not a lot of pressure there. Below 3700, you can see not a lot of pressure, but we got a lot to plow through to get down to 3700, so this will be quote-unquote supportive. It's going to be messy. It's back and forth in context of delta, although the gammas are all negative. I've got some if-thens over here for you to pay attention to if you're interested in playing the short term. This is the transition zone. We do think we're in this kind of a hiding area, and given the magnitude of the expiry, it would not be uncommon to try to park, especially ahead of a 3-day weekend, into an area that has very, very low pressure here. When we take a look at the combo in general, we've got negative gamma down below this 3825. We've got a whole bunch, and very significant, all the way up to 4,000 on the deltas here. What's key takeaway for everyone here is that you can see back and forth all the way up. It's incredibly messy going all the way back up in terms of the gammas. And you can see the deltas are all negative. That is not constructive for a rapid advance and sustained hold up above in this area. It's going to take a lot of work to get through there. We need a whole structure change, and you'll see that on the next chart here. 3800 key line here, 3750. You can see the 3775 quarter level is not very big. The 25 level is a little bit larger, so we could pause there. 3700 line in the sand. Major negative delta, major negative gamma here. I want to pay attention to that. Should be supportive, although messy to get down there. The SPX structure in general, It's wide, it's loose, we're all the way down here, yet we can see gamma all the way up here. Think about that compared to all the gamma, we are sitting here, we don't see any gamma down here because there isn't any. We're getting just really stacked really, really hard into this area. We are seeing kind of a narrowing of the gamma here and an expansion of the gamma here. This structure that you see in here, this is that back forth that I was just talking about. It's really ugly to advance in something like this, so it's going to be very, very difficult to move aggressively up. The 4,000 level is really key. 3,900 is really key, as you can tell. We got a major pocket sitting right here that's negative. So in general, I can't see us getting up here very rapidly, and if we do get up there, I don't think we hold it for any length in time. So just be aware of that. So what's the summary for today? Significant headwinds to move upward. I think our bias is still to get, no, not I think, I know our bias is still to cash or to play the downside for the medium to longer term. We don't think this is a long swing environment, and we know we've got some traders who are looking at some opportunities and licking their chops to get into some stocks on the long swing. We think it's too early. I know Minervini came out with a tweet yesterday saying everyone needs to be looking at stocks. Well, yeah, maybe, but no, don't. OI changes are indicating a potential bounce. I think it's going to be short-term. We've got a number of things happening in July, which I think are going to be counteractive. And again, the SPX structure overhead is just, it's terrible, so I don't think we're going to move up. The market model, you can read it for yourself. I covered this. The wing charts are increasing negative gamma. VIX is mixed. The OI change, short-term calls are being added. Make sure you understand that. So we could see a bounce across the weekend into early next week. I don't think it will be sustained. I do think there are significant headwinds to move upward and hold it. I should have said that here, and hold it into as a new base. I don't think we're there. I think we've got a lot of work to do. So with that, I bid you farewell. If you like today's content, go ahead and come on in and join us at GammaEdge.us. A lot of tools, a lot of charts, a lot of ways to look at and slice and dice this. A lot of traders who are applying this to their trading style, whether they be scalpers, whether you're playing futures or options or even the underlines. Great set of people. Really urge everyone to come in, kick the tires. 14-day free trial, all the tools turned on for you. Lots of content, and a lot of people willing to help you understand what's going on. And there we go with the market bell. Follow us on GammaEdges with the S. And here on YouTube, if you like today's content, hit that like button, please, and subscribe so you can get notified next time we post something. So with that, I'll leave you. Hope to see you in the Discord, and hope that you have a good 4th of July weekend. We will be posting something over the weekend. I want to cover the JPM hedging change and what some of that implication is. And want to talk about a few of the edge rater results that we've been working on to give us an edge here. So take care, everyone. We'll see you.